Very good morning, guys. Yesterday, the governor did exactly what everyone expected. He kept the rates unchanged at 5.25%, a neutral stance. And here is where I want to correct the textbook because most people will tell you that after a boring hold like yesterday, volatility usually crashes. That is, premiums go down. On the contrary, it did not. The volatility did not fall, it is rising. The expiry straddle is not staying flat, it is popping up, and the wall gauge is also going up. And there is a very specific reason for that, and it is the whole story today, guys. Because today is the first ever Sensex weekly expiry that settles under the new single auction close. The same auction that misfired twice on Nifty this week, on Monday and on Tuesday, and yesterday also it settled around 50 points higher. So nobody knows how it will behave on a thin Sensex auction book. And when the market does not know how it is going to close, it does not sell insurance, it buys it. That is why wall is going up and not down in one session. It should be falling. So forget the textbook today. This is about settlement nobody has ever seen. This is the Tanmay. You are listening to an extremely important episode 97. I am Tanmay Kurtoti. Let's go. So starting with the broad, Nifty closed at 24,624, basically flat on the day. But part told you the story. It gapped up to 24,700 at the open, sold off through the 10 o'clock decision to 24,497 low by the midday, then bought back yesterday in the last 2 hours to close right on that 24,600 line, and again into the gas it went up 50 points higher. Sensex closed 78,581, up 152 points, the same pattern. And one relief for yesterday, the Nifty auction finally settled just 50 points higher. The futures basis back to normal positive. So yesterday's number was a bit real, but that was Nifty on a normal day. Today's Sensex on the first expiry under the new rule, different animal altogether. So let me make the settlement risk concrete because it decides how you trade the whole day. Every Thursday, the Sensex weekly options settle on the closing price. Until now, that was 30 minutes last average, smooth and hard to move. From this week, it is a single auction price discovered in a window extremely small. On the Nifty, the week that window has misfired twice, printing the index nearly 150 to 200 points away from where it was trading at 314, 315 before the closing stopped. Now think what that means for Sensex option seller today. If the sell 78,500 straddle, expecting a quiet pin, and then the auction prints the Sensex couple of hundred points away from where it traded all day. Your short is settled against a number that never really existed, and you are run over the bell by the print, not by the market. The desks know it, and that is why they are not selling the volatility into the expiry. They are bidding it up. The straddle that should be bleeding on the last day is rising because the settlement itself has become the risk. Now the Nifty backdrop quickly because it still matters underneath. The FIs turned aggressive on the ceiling yesterday, added 63,000 short calls stacked into 24,600 and 700. The two biggest squalls on the fresh weekly chain. Betting the top is 24,700, but the pros bought 1,47,000 calls. The domestics bought nearly 2,900 crore of cash in the stock market and absorbed the foreign cash selling whole, and the crowd stayed long. So the Nifty is coiled. A foreign resistance is at 24,700 against bullish everyone else. Constructive, but that is the side story for today. The main event is the Sensex expiry. Overnight, the global lead is soft and we are opening up anyway. In America, Dow and S&P both slipped. The Nasdaq off nearly 1% on a tech pullback. Asia this morning is red across the board. Japan is down over 1%. Korea is down almost 4, and still our futures are pointing upwards. Gift Nifty is trading at 24,704, a gap up that opens Nifty right at that 24,700 resistance. India is against a falling Asia on its own steam on RBI holding the rates and cheap oil, and notice gold pushing on again to a record 42.79. The safe haven has come alive, and when gold rises, you keep a watch on the global markets. That is keeping the wall expiry bid higher. Crude is near 80, that is good for us. The rupee firm at 95.12, that is good. So the lesson for today, and it is good one because it turns the usual rule on its head. Normally volatility falls into an expiry, the known event, the decay of time, the pinning to max pin, all of it crushes the premium on the last day. And the smart trade is usually to sell the decaying options, but that only holds when the settlement itself is predictable. The moment the way market closes becomes uncertain, the settlement stops becoming a formality and becomes a fresh source of risk, and wall goes the other way, it rises. That is exactly today. Two glitchy auctions on Nifty has taught us everyone that the closing print can jump, and now that the same untested mechanism runs on Sensex expiry for the first time. So the opinion is not just pricing where the index goes, it is pricing whether the bell prints the truth or not. When you cannot trust the close, you do not sell into the close, you buy the protection. So here's the plan, and it's extremely important. Rule number one, and the most important one: do not sell options into the close until and unless the cash is not settled for another 2 3 weeks. If you're a premium seller, this is not your day. Selling a straddle into first ever Sensex auction expiry is picking up pennies in front of unknown machine. Because if that auction misfires like the Nifty did, your short settle against a phantom print and there is no defense. Rule number two: if you want a position into the expiry, the safer side is to buy both the sides, owning the straddle or a strangle, or even just a cheap OTM options is not going to destroy you. You are long the uncertainty, which is the right side of the untested settlement. And rule number three, the simplest one and maybe best: do not trade the last 15 minutes at all. Stand aside at 3:14. That is the best thing to do. Let the auction happen at the closing. Price gets discovered and absorbed, and come back tomorrow when the dust settles. There is no edge in guessing a print nobody has ever seen. On the levels for the reference, Sensex sits at 78,500 with max pain around that 78,500 to 600 levels, but that is a flat closing that should happen, but not leaning on the pin reference. The range for Sensex as per the options data is telling me around 77,600 on the bottom end to around 79,200 on the upside. That's a wide, almost 1400 to 1500 point zone in which the market can deviate. So a realistic range, if you talk about, is almost 850 points on each side. That gives me almost 1500 points. And on Nifty, constructive buy on dips continues. 24,500 with 24,400 as the stop loss and a clean break about 24,700 wall opens the doors to 25,200. But that trade is not the morning, it's not at the bell, it's at the closing. So scoring on yesterday, guys, and I owe you the correction, call it 4. So full scorecard is available on rupeecase.com. That is the edge for you today, guys. The RBI is behind us, but the last test is at 320 to 330. The first time a Sensex expiry settles under the new cash auction, and that is exactly why the wall is rising instead of falling. So do not sell options into the close. Buy protection if you must be. And honestly, the smartest trade might be to step aside at 3:14 and let the auction get absorbed. Trade the morning, respect the settlement, and let the machine prove itself before you bet on it. This was the Tanmay Edge. If your needs it right now, please share it with one of it right away. Subscribe on Apple Podcast, Spotify, and Amazon Music, and listen it live on rupeecase.com where it streams first. And give it a rating, guys, and a review if you want to add something to the podcast. Have a safe expiry, guys, and don't overtrade today. Today is not a day to experiment. Today is a day to absorb what is happening on Sensex gas.